All right, everyone, greetings to you. You're welcome to this video. All right, so in the previous class we talked about what is Forex, types of currency pairs, and all of that. All right, so today in this course we are going to go deeper into types of currency pairs. All right, so let's just take it. Forex trading involves the buying and selling of currencies, right? Currency pairs are used to represent the value of one currency relative to another, that we said in the previous video, right? So Forex currency pairs can be classified into three categories. We have the major currency pairs, we have the minor currency pairs, and we have the exotic currency pairs. All right, so what is major currency pair? Okay, a major currency pairs are the most frequently traded pairs and includes the US dollar as one of the currency. Okay, now what this means is that there are some currencies that are most traded in the forex market. Okay, and there are about 8 of them. Okay, number one is the US dollar. Then we have the euro. We have GBP, that's Great Britain pounds. We have AUD, Australian dollar. We have JPY, Japanese yen. We have CAD, CAD, Canadian dollar. We have Swiss franc, that's CHF, and we have New Zealand dollar, which is NZD. So these 8 currencies are the most traded currency in the market. Okay, so when you pair any of them with the US dollar is among them, but US dollar is king regardless. Why is US dollar king? Because there are several reasons. Okay, number one is that, or one of the major reasons, is because the New York Stock Exchange is the largest in the world. Okay, is the largest in the world. So any of this currency paired with United States dollar is a major currency pair. All right, so if I pair euro with GBP, it's not a major currency pair, but if I pair euro with USD, which is euro USD, is a major currency pair. So look at the examples we have here. Euro USD, right? This is a major currency pair. USD JPY is also a major currency pair. All right, so as long as any of these currency pairs that are major that I listed for you, all right, as long as one of them is paired with USD, is a major currency pair. Are we together? Okay, so look at other examples. GBP USD, USD CHF. All right, so major pairs are known for their liquidity and tight spread, making them popular among traders. Yes, you know, a lot of traders trade these major currency pairs because a lot of traders trade it. It is popular and it is liquid because a lot of traders pump in money into these currency pairs. So imagine US dollar and GBP. All right, United States Stock Exchange, New York Stock Exchange is the largest in the world, followed by London Stock Exchange. All right, so you could see that these are two big markets. So the rate at which money flows in and out of these markets, it's at a very high rate. All right, so that makes it liquid. Okay, though going forward in the course we'll get to talk more about liquidity and spread and all of that, right? Especially liquidity. Yeah, liquidity is very important. It's very important that you know it. Okay, but we are just at the beginning. All right, so let's move to the minor currency pair. Minor currency pairs are also known as cross currency pairs and do not include the US dollar. Ooh. So what does this mean? It means among those pairs I listed for you, I listed USD among them. Okay, but let's remove USD among them. You will see that there are 7. If you include USD, there will be 8. Okay, so let's remove USD. So let me list them again apart from USD. We have the Euro, we have the GBP, we have the AUD, we have the NZD, we have the CAD, we have the JPY, we have the CHF. All right. Any of these that I listed, if you pair them among themselves, they are under the category of minor currency pairs. So let me say it in another way. Remember, those pairs those currency I listed are among the most frequently traded currencies, right? Good. So in major currency pairs, if you pair any of them with USD, they fall under the category of major currency pair, right? So but the minor currency pair, if you pair any of them, of course it is not really your job to pair them, they already paired and you will see them in your MetaTrader. Okay, yeah. So if you pair any of them among themselves apart from USD, it falls under the category of minor currency pairs. You could see, so just USD attaching itself to any of these, they become major, right? USD disassociating itself, they become minor. All right, yeah. So these are examples: Euro, GBP, right? GBP, JPY, Euro, JPY, and all of that. So minor pairs have wider spreads and may not be as liquid as major pairs. Yes. However, they can offer trading opportunities for those looking to diversify their portfolio. All right. So let's go to exotic currency pairs. Okay. Exotic currency pairs includes one major currency and one currency from a developing or emerging economy. Yes. So an example is US dollar versus South African rand, ZAR, right? So as long as that economy is a developing economy, if you like, pay it with USD, it is under exotic currency pairs. Is that clear? Yeah, so it can only be measured if USD is paired among the most frequently traded currency pairs. Is that clear? All right, so these are other examples: USD, Turkish lira, USD, Mexican peso, and all of that. So exotic pairs can have wider spreads and may not be as liquid as major or minor pairs. Yes, major and minor pairs are more liquid. Major is most liquid. This is followed by this, and then exotic. Nigerian naira is under exotic, right? Ghana cedis is here, and other, developing and emerging economy, right? So they can also be more volatile, yes, offering potentials for higher returns but also higher risk. Yes, they can be volatile, really. They can be volatile, really. They can. All right, so these are the three categories of currency pairs. All right, so thank you and God bless you. See you in the next video.